Every market you have ever heard of runs on the same raw material. It does not matter whether the thing being traded is a bushel of grain, a share in a railroad, a strip of currency, or a barrel of crude pulled from the ground. Beneath the surface of each one, the same forces are always at work, human hope pushing prices higher than reason warrants, human fear driving them lower than value justifies, and human ignorance filling in the space between. The commodity changes, the crowd does not. Most traders spend their careers looking for the secret that lives inside a particular market, the special rhythm of cotton, the quirk of the bond pit, the seasonal pattern in corn. And there is nothing wrong with knowing your instrument. But that knowledge becomes a trap the moment you start believing the market owes you anything for having acquired it. It does not. The market does not care what you know about it. It only reflects what you do. What it reveals, plainly and without mercy, is your character, your patience or the absence of it, your willingness to take a loss cleanly or your habit of carrying it forward into the next day and the next week, hoping the thing turns around. The instrument is almost beside the point. The principles that separate a sound trade from a ruinous one have never been specific to any single market. They ask only one question, and they ask it about you. Most traders get the direction right and still manage to lose money. That is not bad luck. That is human nature at work inside a position. When a trade moves in your favor, something quietly unsettling happens. The profit feels fragile. You begin to wonder when it will reverse. The mind, which was so certain before you entered, turns cautious the moment the evidence begins to confirm it. And so you trim. You take a little off. You feel prudent. Meanwhile, the position you cut short runs another 30% without you. Now turn it around. The trade moves against you. Here, the mind does the opposite. It grows stubborn. It invents reasons. It says the market is wrong and you are right, and it will come around. So you hold. Sometimes you add. You tell yourself you are buying cheaper. What you are actually doing is compounding a mistake with fresh capital. This is the great inversion at the heart of trading. We shrink what is working and we feed what is not. The practical rule to correct it is almost offensively simple. Never add to a losing position and never cut a winning one short before the move has run its course. Probe a trade small. If it proves itself, add to it. If it goes wrong from the start, take the loss immediately and walk away clean. The market is already telling you the answer. Your only job is to listen. Most traders lose money not because they pick the wrong direction, but because they cannot hold a position long enough for the market to do what it was already going to do. The move was there. They just refused to ride it. This is one of the strangest features of markets. The swing does not need your help. It does not need your interference, your second-guessing, your nervous adjustment at the halfway point. It needs only your patience. And patience, it turns out, is the rarest commodity in any trading room that has ever existed. Here's where most people fail. They get in right, they feel the trade begin to move in their favor, and then almost immediately they begin looking for reasons to get out. A small pullback becomes evidence that they were wrong. A quiet afternoon becomes proof that the move is finished. They cash out a fraction of what the position was worth, congratulate themselves on being disciplined, and then watch the real swing unfold without them. Discipline is not the same as activity. That distinction matters more than almost anything else in this business. Livermore understood it as clearly as any trader ever has. Wait for the trend to declare itself, he argued, then sit with it through the natural oscillations, because it is not the entry that builds a fortune, it is the holding. The swing was already there. Your only job was never to interrupt it. There is no asphalt boulevard to success in Wall Street or anywhere else. Why additionally block traffic? Read the tape, not the crowd. The board is at charthorizon.com.